And today I got a special guest, one of my favorite macro analysts, one of my favorite researchers, one of my favorite investors, hands down. Today I want to welcome Lyn Alden to the show. How are you doing?
I'm good. Happy to be here. Thanks for having me.
That's great. That's great. Yeah, I appreciate you being here as well. So Bitcoin has been in a bull market. It's in the bull run right now. I started investing in Bitcoin probably in 2017. Saw it hit the high at that point, and I didn't understand what Bitcoin was about or anything like that. It was just, let's jump in and try to make some money. And then we saw a big correction afterward. We saw a huge correction. I think it went down to 4,000, something like that, over the course of within a year and a half, something like that. So I understand like now that it was a halving cycle that happened that kind of led up to the bull run. And then now we're experiencing that again, but now we have higher highs. And so do you foresee like a Bitcoin correction at some point? And obviously we don't know what it's going to go down to. That's the $1 million question, is like, what is it going to correct down to? But do you foresee like a correction in Bitcoin at some point in other cryptos?
So my base case would be yes. I covered Bitcoin for the first time back in late 2017 after it had that really big run up. And I had concerns back then about how much the price went up and what some of the risks were. So I avoided investing in it. And of course, it had that blow off top, and then it crashed, and then it's been in that multi-year correction. But starting in April of 2020, I became very bullish again for the first time, really, and I went long. And so it's been a really strong run from there. But as we get to higher and higher prices, we have to be more vigilant about, corrective potential because things don't go up forever. There's bound to be corrections along the way. And we've had some of these 20 or 30% corrections during this bull run, which is normal for Bitcoin bull runs. But the thing to watch out for is kind of the end of that 4-year cycle that Bitcoin goes through. So every 4 years there's a halving, meaning that the number of new Bitcoins generated every 10 minutes gets cut in half, and so that generally propels a bull market. But eventually it gets over euphoric. People buy with too much risk. They buy with leverage. They get really excited about it, and when all the buyers kind of get in at the same time, and you kind of run out of buyers for that cycle, you roll over and correct, and then it becomes a vicious kind of downside move. But yeah, the $1 million question is, how high does it get before it corrects, and how deep will that correction be? Because you could ironically, Bitcoin's roughly at 60,000 now. You could get up to 100,000 and then correct back down to 60,000, or you could get up to 200,000 and correct down to 100,000. Who's to say? And so I do analyze different on-chain indicators. Like I look at what is the percentage of coins that are still held by long-term people that are not moving. I look at what's happening with our Bitcoins going to exchanges, or are they coming from exchanges? And so I kind of monitor some of these different indicators to get an idea of where we might be in the cycle. So my base case is that we still probably have more to go, but it's a riskier trade than it was back in spring and summer of last year, because we've gone up so far. So my base case is that there's more to go, but that there probably will be a pretty big year or more correction at some point.
Yeah, that makes a lot of sense. And so like I've kind of noticed, like even with Bitcoin and a lot of these other altcoins, that there's like within the investment, there's this emotional component to it. Like recently, we've seen Dogecoin go from under a penny to 45 cents this morning. I was looking at it and I was like sick to my stomach. I was like, why did I sell out? Why did I sell it? Like it was no reason in doing that. And my wife always tells me like, don't sell it. But at the same time, like you want to know when to take profits and things like that. I think kind of one of those psychological things is that, when we get too greedy and we don't take profits, then when we see these big corrections, then a lot of people end up, getting hurt, and hopefully no suicides, anything like that, no Charles Schwab's or, nothing like that, but, we have to be comfortable at some point taking profits. Like, and how do you kind of analyze that for yourself?
I view it as the percentage of my portfolio that one asset makes up. So rather than precisely trying to time tops and bottoms, I do look for indicators of tops and bottoms. But anyone who's been in markets for a long time will tell you that timing tops and bottoms of different asset classes is extraordinarily difficult. and so it's all about probabilities. So rather than try to time exact things too much, my goal is just kind of risk management. So how much capital do I want to have risk in one investment? And of course, it's one of those things where if it goes up a lot more than you think or faster than you think, of course, you wish you had more in it, right? You wish you were leveraged for it. You wish, you bought as much as you could. But then on the other hand, when, something does correct and go down and has a big crash, and you're still exposed to it, you wish like, oh, I should have sold, or I should have not been leveraged, or I should have, so it's always like, people tend to pour in at the wrong times. Like they pour in on the top of markets, or they get out at the bottom of markets. And it's one of the ways to kind of mitigate emotions in my experience is to just not let any individual asset class get too big, because as a percentage of your portfolio, because if it gets really big, then you're emotional about it, right? You're defensive about it. If someone criticizes it, you're like, you gotta stick up for it, and you kind of like, you're super kind of tense about it. Whereas if you kind of have a collection of different assets that you're bullish on, they can take turns. One asset class might do well for 6 months while another one does poorly. Then 6 months later, they might switch. And as long as you're kind of, all of them are decent assets over time, the portfolio can do very well. And so, for me, I bought Bitcoin. I had a very high conviction it was going to do very well. But rather than say put all my net worth in it, I'm like, okay, here's a pretty big chunk that I think it's going to do well in. And when it did do very well, like, of course, I wish I had even more in hindsight. But it's all about risk management. And so that's how I approach pretty much any asset class. And especially if you were to get something really speculative like Dogecoin, that's where you certainly want to have strong risk management for that kind of trade. Because the thing about Dogecoin is that it was originally invented as a joke, and it's been around for a while. And it's partially because of Elon Musk always tweeting about it, it's done very, very well over the past year. But it's still like, fundamentally it's not as sturdy as something like Bitcoin. And so when we do have this big kind of big correction, some of these other altcoins like Dogecoin, are likely to have a deeper, percentage-wise correction than something like Bitcoin. And so if you look at, for example, previous cryptocurrency cycles, Bitcoin has a big correction, but every cycle it reaches like way new highs, right? So the last correction, like the last cycle got up to about 20,000. The cycle before that, it got up to about 1,000. So it basically keeps making higher highs during these 4-year cycles, whereas some of the other ones, they hit these blow off tops and then they crash. And then even when the next cycle comes, they never get back to those previous highs. And so that's the thing to watch out for with some of these other cryptocurrencies, that they can get caught up in the bull run, but then they can permanently destroy capital. And it's very challenging to necessarily pick ahead of time which ones are going to be persistent enough to keep progressing through cycles. And so far, there's only been a few of them that have done that. Like Bitcoin, it's gone through 4 cycles now, and Ethereum now has gone through 2 cycles where it's hit new highs. And so basically investors have to be careful about some of those other coins, and it is good to kind of use risk mitigation to make sure that they don't have too much capital in any one of them.